Today, we're going to find out exactly what happens when we test the popular moving average trading strategy 100 times. Welcome to this episode of Ahead of the Trade. The moving average trading strategy is one of the most easy to understand and beginner-friendly trading strategies available, but just how effective is it really? Before we get into testing this strategy, we must first discuss exactly what moving averages are and how they are used to generate trade entry and exit signals. Moving averages are one of the most common technical indicators used by traders across all different timeframes and markets. The purpose of a moving average is to smooth out the price data by displaying the average price over a specified number of recent candles. For example, a 10-period moving average will calculate the average closing price over the most recent 10 candlesticks, and it will be plotted as a line on your price chart. Here is an example of a price chart with the 10, 50, and 200-period moving averages plotted. Notice how the lower period moving averages follow price much closer, whereas the higher period moving averages tend to lag behind price quite significantly. What we have discussed here is called a simple moving average, SMA. For the purpose of our video today, we are also going to be working with a different kind of moving average, known as the exponential moving average, EMA. The difference is that exponential moving averages give increased weighting to the most recent price data. This makes them more responsive to recent price volatility and subsequently more useful from the perspective of an intraday or swing trader. Here is the same price chart, but this time with the 10, 50, and 200-period exponential moving averages added as well. Notice how the exponential moving averages are faster to react to price moves? This makes them ideal for generating faster trade entry and exit signals, which can be very useful to help improve our results from trading a moving average strategy. It is important to note, moving averages are calculated using past data. This makes them lagging indicators. The purpose of using moving averages as the key component of this trading strategy is that they help us trade with the current trend of price. When our moving averages are pointing higher, the trend is clearly an upward trend. Conversely, when the moving averages are pointing lower, the trend of price is down. Another key benefit of using moving averages within a trading strategy is that they often act as important levels of support and resistance. Often when price is above a moving average line, it will act as a level of support. When price is below a moving average line, it may act as a level of resistance. For the strategy that we are going to be testing today, we need to add 3 moving averages to our chart: a 10-period EMA, a 20-period EMA, and a 100-period SMA. We are going to use the 10 and 20-period exponential moving averages to define trade signals and use the 100-period simple moving average to ensure that we are always trading with the direction of the broader trend. The conditions that must be met for us to enter a trade are as follows. 1. The most recent candle must close above the 100 SMA. 2. The 10 EMA must cross above the 20 EMA. When both of these conditions are met at the same time, we will buy and enter a trade. Within this strategy, to maximize the profits from our winning trades and to control our risk, we are going to implement the following 2 exit conditions. Firstly, we will exit our trade if at any time the 10 EMA crosses below the 20 EMA. This signals the end of the trend. Secondly, we are going to set a stop loss at the low of the 2 candles immediately prior to our entry signal. Ideally, with this strategy, we are going to enter trades at the beginning of price trends. This means we want to exit our position quickly if price in fact does not begin to trend after we enter the trade. Now that we have our entry and exit conditions defined, we are ready to begin the backtesting process. For this backtest, we are going to use data from the 15-minute time frame chart of the stock eBay, ticker code EBAY, on the Nasdaq exchange. I am going to use this Excel spreadsheet to track the outcome of each trade. This spreadsheet is available for you to use for your own backtesting. There's a link in the description. As per usual, we are going to assume I am trading with a starting balance of $10,000 and risking 2% of my account balance on each trade. If you want to learn more about position sizing and the 2% risk management rule, there is a link to my video on this topic in the description. You'll be able to see my profit and loss updating throughout the backtest, and you can watch the percentage win rate as it develops. I have chosen to use the 10, 20, and 100-period moving averages to demonstrate this strategy for the purposes of this video. However, this will not necessarily be the most profitable combination for all markets. You may wish to vary the moving average periods that you use, depending on the market and time frame that you are trading. If you are day trading a more volatile market, consider using lower period moving averages, as they will be faster to react to changes. Alternatively, if you plan on swing trading or are trading a less volatile market, higher period moving averages will likely be more suitable to enable you to capture bigger picture trends of price. The important variables that are required to trade this strategy are a fast EMA, a slower EMA, and an even slower SMA. The purpose of the exponential moving averages is to signal trade entries and exits. The purpose of the simple moving average is to ensure we are always trading with the broader trend. The variables you choose to test for yourself are going to all provide slightly different results, but the general thesis behind a strategy will remain the same. We want to use a combination of moving averages to help us enter and exit positions in confluence with trends of price. As always, the results of this strategy can be significantly improved by using additional technical indicators and levels of support and resistance as extra confirmation of your entries. Using additional confirmations will help filter for only the highest probability setups, which have the greatest chance of resulting in a winning trade. Some of the common technical indicators that would be useful to pair with a strategy such as this include the Bollinger Bands and the MACD. For the purposes of this backtest, I have taken all valid trade signals. However, if I were to filter them further, the win rate of this strategy could be improved upon significantly. Furthermore, you may wish to add additional exit conditions to this strategy. I suggest experimenting with a trailing stop-loss when trading any trend-following style strategy. A trailing stop-loss can help lock in profits as price trends in your favor and can be a very useful tool for a strategy such as this. There are many different types of trailing stop-losses you can experiment with, such as a moving average or an ATR trailing stop-loss. I will explore both of these types of stop-losses in depth in another video. Now that we have come to the end of our 100 trades, our backtest is complete and we can analyze the results. As you can see, we have a win rate of 40% and a profit factor of 2.74 trading this strategy. We have made 70% profit on our initial balance. Our current account balance is now at $17,086.67. For comparison, if we had performed a simple buy and hold strategy over the same time period, we would have realized a 51% profit. The reason that we are able to outperform the buy and hold returns when trading this strategy is our risk management procedures. By cutting losing trades quickly at our predetermined stop-loss price and letting winning positions trend in our favor, we are able to increase our profitability by trading this strategy. I'm sure you now have a far greater understanding of the moving average trading strategy and are ready to try it out in your own backtesting and trading. If you have found this video to be helpful, consider giving it a thumbs up and subscribing. If you would like to further support the channel and take a sneak peek at our behind-the-scenes notes, as well as a few other perks, we would greatly appreciate you becoming a Patreon supporter. I have left a link in the description. Make sure you let us know in the comments what trading strategies you want us to cover next. See you next time on Ahead of the Trade.